Hey everyone, welcome back to Corporate Decoder. Today CBRE just filed its quarterly report and I'm seeing some interesting shifts in how they are managing their money and operations. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company seems to be navigating a growing economy with a strong focus on strategic investments and managing debt effectively. Let's dive into the numbers for the quarter ending the 30th of June 2026. CBRE Group reported total assets of over $30 billion. That is a massive company. Looking at their current assets, which are things they can turn into cash within a year, they had about $12.9 billion. A big chunk of that is receivables, meaning money owed to them by customers. They have an allowance for doubtful accounts, which is basically a buffer for money they might not collect. And that stands at about $136 million. They also have a significant amount of goodwill, over $6.9 billion. Goodwill often comes from buying other companies for more than the value of their physical assets. It represents the value of things like brand name and customer relationships. Now, on the other side of the balance sheet, their total liabilities are around $21.3 billion. A large part of that is accounts payable and accrued expenses, which is about $4.9 billion. This includes money they owe to suppliers and for things they've incurred but not yet paid for. Their long-term debt, which is money they owe that isn't due within the next year, is around $5.7 billion. The equity, which is essentially the owner's stake in the company, is about $8.7 billion. This includes their common stock, where they have over 289 million shares issued and outstanding. Let's move on to how the company is performing. For the 3 months ended the 30th of June 2026, CBI reported revenue of over $11.2 billion. That is a solid increase from the previous year. Their cost of revenue, excluding pass-through costs, was about $4.5 billion. This means that for every dollar of revenue they brought in, roughly 40 cents went towards the direct costs of providing their services. Operating, administrative, and other expenses were around $1.5 billion. This covers the day-to-day running of the business. This resulted in a net income for the quarter of about $247 million. After accounting for the portion that belongs to non-controlling interests, the net income attributable to CBRE Group itself was about $204 million. This translates to basic earnings per S-share of 70 cents. Looking at the first 6 months of 2026, their revenue was over $21.7 billion. The cost of revenue excluding pass-through costs for this period was about $8.7 billion, and their operating, administrative, and other expenses were around $3 billion. For the first half of the year, they reported a net income of $589 million, and the net income attributable to CBRE Group shareholders was about $522 million. This amounts to basic earnings per S-share of $1.78 for the 6-month period. In terms of significant events, the company made some key acquisitions. On the 4th of November 2025, they acquired 100% of Peer Services LLC, a company focused on technical services for digital and power infrastructure. This acquisition became part of their building operations and experience segment. Earlier, on the 16th of January 2025, they fully acquired Industrious, a flexible workplace solutions provider, increasing their ownership to 100%. This also fits into their building operations and experience segment. CBRE structures its business into 4 main reportable segments: advisory services, building operations and experience or BOE project management, and real estate investments or REI. They also have a corporate and other segment that handles central costs and non-core investments. Looking at segment performance for the quarter ending the 30th of June 2026, the advisory services segment brought in over $2.3 billion in revenue. The building operations and experience segment, which includes facilities management, was their largest, generating over $6.6 billion. Project management revenue was around $2 billion, and real estate investments brought in about $193 million. Adding these up, we get the total consolidated revenue of over $11.2 billion for the quarter. Their total segment operating profit for the quarter was about $835 million. And for the first 6 months of 2026, the segment operating profit was over $1.6 billion. Geographically, the United States remains their largest market, contributing over $12.3 billion in revenue for the first 6 months of 2026. The United Kingdom followed with almost $3 billion, and other countries collectively generated over $6.4 billion. Now, looking at the bigger picture and what this means, CBRE is a global real estate services giant, and this filing shows they are continuing to grow, especially in areas like facilities, management, and project management. The acquisitions of peer services and Industrious show a clear strategy to strengthen their offerings in critical infrastructure and flexible workspaces. Despite some fluctuations in revenue from their real estate investment segment, the overall financial health looks strong. They are also mindful of costs, with initiatives aimed at efficiency. However, there is a significant provision for fire safety remediation efforts, which is a substantial cost but likely a necessary one to address historical issues. Their balance sheet shows robust assets and managed liabilities, and the equity section indicates a healthy ownership stake. The earnings per S-Hare for the 6-month period are $1.78, which is a positive sign for shareholders. A key metric they use is core EBITDA, which was over $1.6 billion for the 6-month period. This measure, while not a standard GAAP metric, helps them and investors understand the operational profitability before certain non-cash items and financing costs. The overall revenue growth of 17% for the first half of the year is impressive, showing strong demand for their services in a recovering real estate market. Now, like any company filing, there is a section on forward-looking statements. This is where they talk about what they expect for the future. They mention things like economic conditions, currency fluctuations, and